Hey guys, everything new under the sun. I apologize for not getting videos out this morning, but it was take hogs to the slaughter day, and you'll find out, well, probably in a couple of days, why that never happened. I couldn't get the hogs into the trailer, and that's all part of the fun of homesteading. Deutsche Bank is in the news, and if you've clicked on this and you couldn't care less about homesteading, well, let's just get right to it here. This is a zero hedge article, and I was only it was only this morning that I hadn't been putting out update videos, and I got a lot to talk about already. There's so many articles, so much has happened, more terrorism events in the U.S., and this one is another Deutsche Bank update, and things are going badly in the economy. And we're going to look at a chart here that shows just how badly they are compared to Lehman Brothers. It all has a very 2008 feel to it for Deutsche Bank. The news just keeps getting worse is the headline. And here's the image here, obviously, of Deutsche Bank. So Lehman Brothers is in red, and you see them going down, and then they flatlined here. And Deutsche Bank is blue, and you can see it following a similar trajectory. Ups and downs, it's very close in the ups and downs here when you consider the comparative lines there. Here it's up and down, and then where does this line end up? Does it start flatlining very shortly, or is this the actual drop point here? We'll see. Now you can see in terms of, this is the September line here. You can see that Lehman Brothers dropped prior to. What is this? That must be the end of September here. No, that cannot be the end of September, because we're past September, we're almost October here. So yeah, this must be the September start line here, and Lehman Brothers occurred prior to that on the timeline. I don't know the exact date. October, obviously, something or other. I guess I could Google it. Regardless, they are very much the same in terms of the downfall of their share prices and heading down further. It has already been an abysmal day for Germany's biggest lender. Overnight, Deutsche Bank plunged to fresh all-time lows on speculation whether the German government would or wouldn't provide state aid to the bank if needed, in brackets, forcing the bank to state it does not need the funds at the same time as the government urged markets that you can't compare Deutsche Bank and the other bank. The Lehman Brothers, although looking at the chart, one may beg to differ. However, while the Deutsche Bank stock closed at session lows over 7% lower on the day, with its market cap of $16 billion, now rapidly approaching the $14 billion litigation number that the Department of Justice, DOJ, demanded of it. The bad news didn't stop there, though. In a report issued an hour ago, at the time of this writing, which is earlier today, by Citigroup, titled Capital Litigation and AT1 Coupon Risks, bank analyst Andrew Coombs says that Deutsche reported an end June CET1 ratio of 11.2% pro forma for the HXB stake sale, but still only targets C11% by the end of 2016, as further litigation charges are assumed, with management expecting to resolve 4 of the 5 major outstanding litigation cases this year. To this, Citi says that it struggles to see how Deutsche Bank can reach fully loaded SREP requirement of 12.25% in the medium term. Very bad information. So effectively, their market capitalization is $16 billion, but because their stock prices are heading downwards, they are getting now close to the $14 billion. So the total, the worth of the company being $14 billion, and that's obviously how much the Department of Justice demanded of them. Now, that may not be the final resolution to that once they get their lawyers involved, but basically that would bankrupt them, give them a zero capitalization in the market if that were forced upon them, and then they would need a taxpayer bailout. Another article here that is basically making the direct comparison. Germany goes there. You can't compare Deutsche Bank to Lehman, which is part of the article I just read. When it's important, you have to lie, the article says, is the now well-known mantra from European leaders when the crisis hits. So when a German politician proclaims you can't compare Deutsche Bank with Lehman, the bank is in a position to get out of this situation on its own. It's time to panic. Just a week after the 8th anniversary of Lehman's collapse, multi-trillion-dollar derivative book of Deutsche Bank dwarfs that of Lehman. So Lehman Brothers was small potatoes in comparison to Deutsche Bank, who was a much larger, employs more people, and has much more derivatives exposure than did Lehman. And the credit markets are starting to wake up, it says. At the bottom of it says, following the government exclamations that there will be no bailout for Deutsche Bank, Hans Mickelbach from Merkel's Christian Democratic bloc and a member of Germany's lower house finance committee confirms it is unimaginable that the German government would support Deutsche Bank with taxpayers' dollars. And I imagine they said that before the 2008 crisis, where the U.S. government used all of its taxpayers' dollars and more printed money out of thin air, not even backed by taxpayers' dollars, to bail out all the banks. It would lead to public outcry, as it a little bit did in the U.S., but not too much. There's not been riots about it, at least not like the race riots happening. You can't compare Deutsche Bank with Lehman. A bank is in a position to get out of it on its own. And that's never going to happen, because if they were in a position to get out of it, they would be getting out of it now. Well, maybe the truth is they can't get out of the derivatives they've got themselves into. German government would lose credibility if it jumped in after. It was always said in the past that Deutsche Bank isn't affected by the financial crisis, and that would be an absolutely stupid thing to say if they actually said that, and apparently that's what they said. It appears that the CDS market is starting to wake up to the reality of the situation. So bad news. The article goes on. I'll put the articles in the description. You can read them. But they are going there. The German government itself has went there. They are saying Deutsche Bank is the next Lehman Brothers. And what can I say? I will leave it there. We're basically waiting for Deutsche Bank to fail and bring down the entire economy 10 times, maybe 100 times worse than 2008. Hold on tight. Strap in. Put your seatbelts on. This is getting serious.